Traders War Room wants to thank you, the viewer, for coming along with us on this journey. Please check out the description tab, as all links to the content discussed in the video will be there, as well as our social media platforms and links for online brokerage if you so choose to decide to get into the stock market. Attack, destroy, and conquer. And as always, if you're ready, follow me and let's go to war. Traders War Room wants to remind the viewer that all content on this channel is for education and entertainment purposes only. You are responsible for every decision you make within the stock market. What's up, team? Chuck with Traders War Room back at you with your Saturday special. We're going to talk about what type of trader are you. I told you guys in the group that we were going to discuss and break down the different types of trading styles there are, because it truly correlates directly to the type of trader you are. So you might notice that maybe you're having success because you are within your strategy, or you might be having some trouble trading because you got the wrong strategy, because your personality isn't fit for the type of strategy that you're using. So we're going to get into it. What I'm going to use first is Investopedia, and I want to talk about what type of trader are you. And it gives you a couple different ones. So we're going to talk about the fundamental trader. And I'm going to have the links in the description so you can check it out. But I want to kind of varnish size this for you guys and just put it in terms. Fundamental traders. It's a method in which the trader focuses on company specifics. So they dive into the management of the company. They dive into the financials. They divide into the pipeline, the dream, the products that they have. And so what they're doing is they're taking all of that into consideration and deciding whether it's something they want to jump into. And normally fundamental traders are more long-term thinking. So they're more investors rather than traders. So moving on. We talk about a noise trader, right? Noise trader refers to a style of investing in which decisions to buy and sell are made without the use of fundamental data specifics. So they're more trend setting, and not so much like meme type trends, but these guys are looking at more technicals, charts, and things like that. So the company could, like MVIS is a great example, right? So fundamentally, MVIS should trade nowhere near the dollar amount that they're trading at currently, but their charts suggest that they have resistance and support zones at different levels. You know, you use indicators. That's another video, though. This will take too long if we go into indicators, but just you should understand the indicators, you know, moving averages and EMA and strength trend lines, right? So what they're doing is they're looking at the technical charts, and they're noticing like, oh, this dipped past the 50 EMA, and last time it did that, it popped back up for a charge. So this might be a good time to get in. So they hop in, you know, they write it up or write it down, whatever the course may be, and then they decide to get out at a certain point. So noise traders are not so much as day traders or scalpers that they might actually swing their trades, but they're based off the technicals and not so much the fundamentals. So they're not looking to stay in the investment long term. They're just looking to stay in, get it pop, make some money, and then get out. So let's move into next, the sentiment trader. Sentiment traders are real big on trends. Okay, this would be what your meme stocks are, your GME, you know, trend, your AMC trend, your short squeeze trend, you know, all those Reddit stocks and things like that. This is your sentiment traders. They're going with what is trending and what's the flow. And a lot of this is based off of momentum. A lot of this is based off of volume. And a lot of this is based off of just general sentiment. So also sentiment traders can also be one of those that if you notice a trend like this stock always runs up, you know, going into earnings and then dips off, well, you know, there's a pattern, right? And patterns don't have to repeat themselves, but they tend to repeat themselves more often than not. So you follow these trends and you work your way up, and then you know that before earnings, you're buying the rumor, selling the news, right? Next one they have is the market timer. Now this one's really more difficult to play because truly if you were trying to time the market, you will fail 99% of the time, right? And it really comes down to just being lucky. So people that say I timed the market and they made a huge jump and things like that, it's usually because they were lucky. Let's just be bottom line up front. But you can time kind of trends. You know that the market's going to slow down a little bit going into March, right? And that usually the first 2 weeks of April are a little weaker than the latter 2 weeks of April. So you know these kind of trends. The summers are usually a little boom, then you got a cool off period, and then going into the winter season, the market starts picking back up, right? So these are some trends that you're seeing that you can time, but you're not really timing the perfect entrance and exit point. That really just depends on what's going on in the market that particular day, because every day is a new market. All right, and finally, they talk about the arbitrage trader, right? They simultaneously purchase and sell assets in an effort to profit from price differences of identical or similar financial instruments on different markets or in different forms. So when I think of this, I always think of big conglomerates. So these are really your institutional guys, right? These are guys that are saying, all right, I'm gonna buy this and I'm gonna buy this. So I'm gonna buy this in the New York Stock Exchange, I'm gonna buy this in the NASDAQ, and I'm gonna buy this in some other industry because they're all similar, they all roll off each other, and they're all gonna help the other one, you know, go up. And so they're buying. Also, some of them can be sympathy plays. So you also know if you buy eyes, EYES, right? Typically with eyes, ears runs as well. So if you buy eyes, you can get into ears at the same time. And more often than not, ears is going to pop, maybe not as much as eyes because eyes has some sort of catalyst going, but ears is going to run along with eyes, and vice versa. If ears is popping, you want to look at eyes because eyes might be running sentiment along with that. So that's really what I think about when it's arbitrage trader. On the big sector, though, it's really talking about the institutionals where they're really, you know, doubling down on a certain type of industry or sector, and they're buying from multiple exchanges to push that particular sector up. Now, we talked about the type of traders. Let's talk about the traits that are associated with them, right? So how to choose a trading style that suits your personality. Scalping. So we know what scalping is. It's very rapid style of trading, right? Scalpers will hop into sometimes multiple plays in the same stock very fast and rapidly within a few minutes to hours or throughout the day. So a scalper might hop in, you know, oh, volume spike, boom, right? They hop into the stock, they ride this volume spike up, and then they get out, and they come out with 10, 12, 15%. And then they notice there's a cool off period, or maybe the stock continues to go up. So they hop in again because there's a lot of volume, and they ride it up again and get out, you know, a bunch of 10, 15, 20% wins here and there. And then they'll wait for a cool off period, see what it does. And then once it, you know, has maybe 3 candlesticks going down, 3 red sticks going down, they're playing off of a pattern, and it might spike back up. So they wait for confirmation. As soon as they see that spike, they're going to hop back in, and then they're going to sell at the top. So they're scalping all day, making just little 5, 10, 15, 20%. And sometimes they hit a supernova, but scalping really is smaller, multiple small wins throughout the day, multiple stocks, and maybe the same stock multiple times. Day trading. Day trading is a style more suitable for day traders that prefer starting and completing a task on the same day. So day trading, typically, you know, how I day trade is I'll watch pre-market for a little bit, and I don't like to get in pre-market because it's usually inflated because there's restrictions aren't there, and I'll look to see, you know, some stocks that I'm looking at, see what they're doing, and once the bell rings, I'll see what happens, you know, whether it shoots up, whether it holds, or whether it starts tanking. And usually if it's holding or if it shoots up, I don't really get in right away. I don't like to hop in the market once the bell rings for at least 15, 20 minutes. But if it tanks really hard, as far as the opening bell is concerned, I like to get in when it's real, real low. So I'll see where it's at as it's low, and I'll put a limit buy in, and I'll try to hop in real quick so that when it pounces back after the sentiment, because the sell-off was happening because it was so inflated, I'm going to ride this thing up, and I'm going to watch it throughout the day, you know, put trailing stop losses, and of course make sure that I'm good to go on my regular stop loss. But I'm going to watch it throughout the day and see where it takes me, and not be afraid to take multiple profits on the same position throughout the day. Swing trading. So this is when you're holding a trade. Normally swing traders, they like to hold trades for, you know, anywhere from days, weeks to months. But you know, a typical swing trade would be, example, Disney has earnings this week, right? And so I would buy Disney last week on a low, say dipped on Wednesday, right? I'd buy Disney, get a position started, maybe an option contract, and I would be playing Disney to ride up this week, you know, buying the rumor, selling the news, riding up into earnings. That would be a swing trade. Now, position trade, let's use the same stock, Disney, right? So I love Disney. I've been a Disney fan since I was a baby, right? And I'm pushing Disney onto my friends and my family. And so now it's becoming truly a generational type of thing with Disney for me and my family. And it was the same way with my mom. She passed it down to me. I'm in Disney forever. This is a forever stock for me. This is one of those stocks that I'm just going to hold for a long time and even, you know, go into retirement with. So that's position trading. I'm making a long-term decision to hold this stock at least 3 to 5 years. And that's what I consider position in long term. I plan on holding it forever, but you never know what happens with the company. But at least 3 to 5 years, I'm going to hold these stocks and dollar cost average on any dips into the stock. So now you got an idea. Now I would be doing you guys a disservice if I just left you with this. So we're going to actually go to the chart and we're going to look at how these correlate to some stocks. And I got some of the stocks that we got earnings for next week, so we can actually see what type of trades would have done well and not so good within the last week. So let's go to Webull real quick. All right, here we are, Webull. I'm going to look at PLTR, right? So we got PLTR coming up with earnings. And let's go ahead and maximize this chart so we can see this a little bit better. And we're in the 1 minute chart. And so PLTR, if we go to the day chart, we notice, look at this, PLTR, it has been getting just demolished, right? Since January, just constant downward spiral, right? But there's been some opportunities for some plays, but definitely nothing long-term. If we're holding long-term, and especially if we're up here, we're definitely not happy with the results right now. However, right now, currently where it stands at this level, this 1975 level, this to me is a buy zone. So I wouldn't mind making a position in this. In fact, I have a position at $20 and this is long-term. And when I think of positions, especially in this stock, this isn't a stock that's a forever stock yet, but this one is definitely a position stock. I want 100 shares. Forever stocks, my goal is 1,000 shares. But a position stock like this would be 100 shares. So I wouldn't be opposed to coming in at this level and grabbing up 50 shares, nibbling, seeing what it does. If it goes down a little bit more, nibbling some more. But ultimately, I got faith that this is going to hit $50 near term and be a 3-digit stock, you know, within 3 years. So this is a position stock for me that I'm looking at very much. If you were to day trade this, though, let's look at the day trade chart. So you saw that it was up here. I'm not liking this for day trading, to be honest. Now there's some opportunities. So if you follow the trends, you saw this big red candlestick, lots of volume. Look at the volume with the stick, right? And it's down, boom, right? And you saw it and you got in down here. And you could have rode this up, you know, a quick little scalp, you know, right there. It was here at 22.84. Ride it up 23.57, you know, a little 75-cent profit, but you don't want to hold that because eventually it's going to continue going down. Another opportunity when you saw this, some consolidation here, and you saw the down. Well, got to go up. What goes down has to come up at some point, even if it's still trending down all the way. So you'd get in here, right? Ride it up. You'd want to roll out again because here you got 20.89. And here it was 21.94, so there'd been $1 profit, right? So that's how you can kind of day trade and maybe even consider scalping this. Now, if we were to completely day trade this, let's look at how it did the entire day. So let's go into the 5-minute chart. All right, we're going into 5-minute chart. All right, here we are. So we're noticing, here's the 5-minute chart. We're noticing that once the bell rang, right, we had an initial push up, the bell, it dropped, and then it catch back up, right? If you would have caught this here, 2015, 2014, you could have rolled it up to here, but that's nothing significant, right? But if you would have caught it here, and you would have held it throughout the whole day, look, it just continued to dip, and it went all the way down. You would not have been happy with this had it been a day trade because there was nothing here that was lower than how it closed. So that would not have been a good trade at all. Let's go to another one. Let's check FUBO, right? Now, this is one of those that had a lot of high hopes with it, but just got demolished like some other ones. And let's see what this has to offer. So when we go into the day chart, FUBO, and by the way, I like FUBO as a long-term investment, not a forever investment, but a long-term investment within a year, 6 months to a year. And I think right now is a good zone to get in. It could pull down a little bit more, but I don't see it going down much further. Maybe it's at 17.24 now. I don't see it going down to any further down than say $16, $15. But the upside is here. So I wouldn't have any problems grabbing up 100 shares of this and just holding this. Now, I had this before. I had it here in the 20s, and I rode this up to about the 50s, and I got out. And then it started, doing its thing. And I was thinking about getting back in, but I didn't. So thank goodness I didn't, because I would have been holding a big bag up here. But down here, I'm considering getting in and riding this thing back up when the market recovers. Now, if we were to trade this, let's go into the day trading chart. Let's try the 1 minute chart with this one. All right. If we were going to day trade this one, let's look at it. So we know it's coming into the 7th, right? What did it do? As soon as the bell came, it rode up, right? Now, this would have been an okay position. We saw it coming, we got in. Okay, there's a lot of volume. Look at that volume down here. Boom, hop in, right? Ride it up, starts to consolidate. Okay, that's fine, and rides up again. That would have been a great return for a day trade. 1740 to 1853, nice return. But after that, it just, it didn't make any higher. It just kept turning down, 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 down. And we're looking at some bearish divergence here, right? So it wasn't doing so well. So this would have been, unless you caught it in early and got out early. But if you were doing a true day trade with this all the way, this would not have been good. Now, had you got yourself a put up here, right here, this one would have made some money, believe me. But I don't see this going any further down. There was, this was a pretty strong candle here down, pushing it all the way. I see this bouncing up. I see this coming up on Monday, especially going into earnings, especially going into earnings. I see this bouncing up. I think this is going to be a play that's going to bounce up pretty significantly, and would be a good idea for a call at this time. A put would have worked for this day, but definitely a call for next week is what I'm thinking. All right, one more stock, and then I'm gonna let you guys go, okay? All right, I want to talk about Disney. We talked about Disney. Let's talk about one of my forever stocks, right? Now, when I'm talking about forever stock, I want to be real clear with you. Let's go into months. I want you guys to see this stock, okay? Look at this stock, all right? We're looking at it in years, all right? 1984, 89 cents, okay? Doing nothing, right? Spikes here, all right? See some big movies, maybe The Lion King, maybe Aladdin, something like that, right? We're seeing some other spikes, boom, okay? We're starting to see the streaming service come, all these things. We're starting to see, digitalization of movies and all this cool stuff like that, right? I mean, this thing is a beast. Look at this. I mean, this is going to just continue. Now we're going to have a cool off period. Okay, that's a given. We're going to have to cool off. Consolidation period that comes out here, maybe even comes down here. Maybe even Disney gets back to, $170, $146, right? Okay, I get that. But ultimately, look at the way this thing's trending. This thing is on the path for success. If you take this and you go here and you put the same time frame, 2010, right, to 2020, boom, right there, draw a line to 2030. Okay, you're talking over here. All right, so we're doing good with Disney. I got Disney as one of my forever stocks. I am not getting rid of this thing anytime soon. I don't care what it does. It could drop down to the $90 range. I'm still going to hold my Disney shares and average down. When I have forever stocks, I'm dollar cost averaging in there. So, look, I hope that helped you guys out. Gave you guys some rhyme and reason to what type of position traders you are. I know it takes time. You gotta put in the work in order to understand these type of things. If you just are going off of people giving you trades, if you're just waiting for Dead Inside's pick or Chris Sain's, 100K challenge or Stock Most pick of the day, you guys are doing yourself a disservice. Okay, those guys are great. I listen to them. I listen to them for ideas to reinforce my already ideas, but I got to get out there and do my own due diligence and look at the stocks. You got to get on the charts. You got to look at the fundamentals. You got to get in there and you got to get your hands wet, get your feet dirty, all that stuff. Okay, you got to do it so that you can make sure that you're better prepared today than you were yesterday. That's the goal. I tell you guys that all the time. Remember, hey, we're going to end this with a Trader's War Room. We look at the stock market like it's a war zone, right? And stocks in the sectors, those are our battles, and we do it together as a team. Now, if you're ready, follow me, and let's go to war together. Peace, guys. See you later.